everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook. Welcome back from the long holiday. Hopefully everyone enjoyed their time off, spent some time with the family, friends, all that fun stuff, got to rest up a little bit, and coming back into a relatively calm and quiet market, unless you were watching the Euro today. Pretty big mover there, but it's kind of to be expected, right? When we're talking about the markets, keep in mind this is one of the biggest holiday weeks when it comes to summertime. This is when everybody can duck out for a while. The kids aren't at school. You know, it's a way that a lot of people can really just kind of hang out, and they usually take the whole week off. So this whole week could be a little bit slow. And when we come in on Monday, that's when a lot of traders and a lot of people in general will be going back to their desks, back to their office, back to their workplace, and kind of, you know, get into the groove of things. They may still be dreaming about the beach, but they'll be back at work on Monday. So chances are today was a little bit slow. Tomorrow's probably going to be pretty slow as well. But as we go into next week, it should start to pick up just a little bit more. Now, as always, before we jump on in, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to let you sign up your email in our mailing list so that we can send you a message every single time this video comes out. Along with this video, in that email, we talk about all kinds of different stuff from stocks, cryptocurrencies, Forex, you name it. If it moves, we're probably going to talk about it at some point. It's just a great newsletter to have your, have sent to your inbox, something useful for once rather than all the other junk that gets sent out there. Now, along with that, at the bottom of the page in the blog post section, every day we post two different things. We have right before the live trade room opens up every morning with our members, we post the live trade room morning prep levels. Those are the major levels of support and resistance for that day. So a great resource there to have if you're looking for some big levels of support and resistance to play around with. Along with that, we also post a market psychology video or a trade of the day video that goes over just kind of what we saw that day in a specific market, just to help us get better every single day. Now, if you haven't done so already, make sure to go down and click on the live trade room subscription and trial info. That'll let you sign up for a one-day trial in the room, see what we're all about, sit down with us in the live trade room, and just kind of hang out with us. You can ask questions, you can see our charts, you can see everything that's going on, you can just kind of get a feel for us, right, overall. Now, if you do find that you really enjoy it, you can always sign up with a 1 week or a 1 month subscription, and if you choose to join as a full-fledged VIP member, the live trade room comes as part of the package, so you never have to worry about it again. Now, taking a look at the markets overall, today, obviously, a pretty big mover on the euro. The euro has some beautiful upward momentum, and if we zoom out a little bit, we can see that this kind of goes with a continuation that we've been talking about for quite a while. We had that big bull rally up, nice deep pullback. Buyers took that as cheap and rallied it back to the highs, and now the same thing, except extended for a little while, pulls back down towards that same area. Notice where it found a lot of that support, the same area where buyers came in before, they came back in again, and now we are off to the races back to the top side. So lots of bullish momentum coming off of bigger areas of support and resistance, and at the moment we appear to be forming a little bit of a flag. Now, one thing that really stands out here is how strong this trend is and how little of pullback we've had. This is the first time that we've even had a candle close underneath the moving average for pretty much the entirety of the day. The last time was right there at about 5 this morning. So the first time we've actually had a candle closing underneath the moving average, let alone a full candle even getting underneath it, a lot of buyers are going to be thinking, you know what? This might be all the pullback we get, and this could lead into another rally to the upside. Probably not as big as what we've seen so far. I'd be looking for maybe, up to 4,700 or so, maybe a little bit further. But overall, we're bullish, and this is the first big pullback that we've had for most of the day, at least in terms of moving average pullbacks. There's a good chance that buyers are scaling into this and are looking to push this market back up towards the highs once again. So be on guard, because we may have another bull rally going into the overnight session. Now, in terms of deeper pullbacks, if we get a deeper pullback, I would love to see buying it around 14,201, 14,080, 13,925. But let's be realistic here. We're probably not going to get that big of a pullback. I would honestly be surprised if we got a pullback down to even around 14,400. It would be a little bit of a shock, honestly, but I would love to see some buying pressure around that 1440 area. That would definitely pique my interest if we can get even that far down. Overall, though, expecting this to turn back up and go into the overnight session with another bull rally. Over on gold, For the most part, they tried getting a bull rally in the morning, but they kind of fell apart and, well, they gave it all back, and now we're just kind of stuck in a range. The overall range could likely be broken up into two separate areas as well. Kind of the middle range right here. Highs, they're questionable around this area, though, 24.3. Lows down at 22.4, highs at 26.6. Again, these are all kind of fudgy areas. You can kind of play with them a little bit. It's more likely kind of a zone, something like this, something like this, something like this, right? Give a few ticks on both sides just for a little bit of wiggle room. It is a range after all. They tend to not be the most accurate things in the world. They tend to be a little bit fuzzier. Now, the overall movement, obviously the range is seemingly more pinned to the bottom than anything else. If we zoom out to get a bigger picture, we can see that that kind of makes sense, right? We pushed all the way back up, we trapped above those previous highs, and it never looked back. They just keep falling down and down and down, and today, it's just been lower high after trap, and then a lower high, and then a lower high. They just keep pushing down. So the one last kind of line of defense that the buyers have is going to be down here, kind of cutting across, and that's going to be at around 12, well, I mean, kind of cut the difference, I suppose. It would be right around in the middle area, around 12.20, maybe a little bit lower down to 12.18, but, you know, either way, that whole zone down here, every single time the market dips down into these lows, it's bought right back up, and that's likely going to be transitioning into that larger range that we're seeing right now. So even though we are playing an intermediary range, it's likely that we are fading off of the highs of a larger one and gearing up to push down to the bottom. That does go along with a bigger trend as well, so it makes a lot more sense to be looking bear side than anything else. It doesn't mean you can't buy, but just be a little bit guarded on the buy side. The sellers definitely have the wind in their sails, if you will. Now, the overall downside momentum looking like a little bit of a bear wedge. We are nearing the highs of it, so in all honesty, I wouldn't mind seeing this pop a little bit higher up, fail to hit that 26.6, maybe pushing into the 12.26 flat area, and then turning right back down to finish off the job to the downside, and we can start cycling in towards the larger range at play. Now, one thing to consider as well that does happen very frequently when you have these kind of inside ranges, you have the smaller range inside the bigger range range being that multi-day range, you'll see this range tear itself out. And that means that if that is the case, we're going to have another level of support kind of equidistant of the original size, transposed down, and that's going to be at 18.2. So definitely another area to consider, and if we go higher, it's the same thing. We can take that exact same range drawing and pop it up on the highs, and now we have an area of resistance above us, just for whatever reason. If the market decides to pop higher, we have a level above us to work with as well. Overall, though, we're just kind of cycling around in the middle, kind of, I mean, just flat in the middle right now. I would rather wait to sell a little bit higher. Remember, in a range, you want to sell high, buy low, stay out of the middle. Well, right now we're in the middle. So we got to sit on hands for a little while, but preferably we can get some favorable movement into areas of interest. On crude oil inventories were today. Now, with the inventories being pushed off to today, we had a big bull rally up and then a collapse all the way back down. And that collapse down opens up two below us really big objectives that have yet to be hit. 44.97 and 44.94. They're pretty much stacked up on top of each other, but those are major bear objectives to the downside that the sellers are going to be looking for going into the overnight session, going into tomorrow. So definitely looking for continued bearishness. One thing that really stands out, we are forming a very obvious wedge here, and with this obvious wedge, I of course would love to see a counter trend breakout, counter trend being bullish, assuming that it's going to fail, and then dump it back down, because all that's going to do is give us some better prices to sell into to drive the market back lower. Everything else lining up pretty well, though. If it does want to rally higher, again, for whatever reason, I don't think it'll really get that high, but if it does, we do have some selling at 45.85, 46, 46.17 and 46.24, but chances are we're not even going to get up that far. I would be looking more for a trap around that prior swing high, the test of the top of the wedge, 45.56, and then look to dive bomb the market back down to finish those objectives off towards 45. And then finally on the S&P, kind of good-looking bearishness overall, a little bit kind of choppy, sloppy, lots of back and forth going on with the S&P. Not a whole lot going on, you know, in sustainability sake, but, you know, for the most part, we have a nice bear trend working its way lower with a lot of deep pullbacks. The one thing that stands out here is we are blowing through the lows of that attempted channel. That channel was drawn off the highs through here, transposed to the bottom, and now we have a breakout lower. Now, with that breakout lower, it was a twin reversal right back up. They close out, immediately close right back in, and that tells us one of two things is likely going to happen. Either this makes one more leg to the downside and then it fails and turns into a range, maybe a little bit of a bull correction, or this gets even more aggressive to the upside and continues up for an equidistant breakout of the highs of the channel. When you have a breakdown of the channel, you tend to get a breakout of the top of the channel, and that is a little bit of a leading indicator because we have another level of resistance coming across the highs that the market may want to reach out and touch. So at 2420 or so, by the time it gets up there, would be nice, but around the top of that other wedge area could be a beautiful potential buy. I'm sorry, a potential sell, rather. Now, a couple areas in the way, I guess, you might be able to find some scalping off of these as well, but 24.12 and a quarter, 24.15 and a quarter, and then up to 24.18. And again, depending on how long it takes, maybe breaking out above the highs and testing that other higher up wedge top could be another level of resistance. So overall, that's going to do it for the outlook. Now, in terms of this week, we already kind of talked about it. Just play it really careful. This week is a little bit of a grindy one. We've got, a decent amount of news for tomorrow, and not to mention the fact that this is really a big holiday week, and a lot of people might not even be home right now. In terms of news for tomorrow, out of the UK at 4:30, we have manufacturing production month over month on May, forecasted at 0.5%. At 8:30 for the U.S., we have the non-farm payrolls, as if you needed another big thing to potentially get your guard up for tomorrow. We have non-farm payrolls forecasted at 179,000. Previous was 138,000. Unemployment rate forecasted at 4.3%. That is the same as previous. At 8:30 out of Canada, we have the employment change forecasted at 10,000. Tentatively throughout the day, we have the Bank of England Governor Carney speaking, and then at 10 o'clock out of Canada, we have the IV PMI. Previous was 53.8. So plenty of stuff to get the markets moving tomorrow, but most of it happening pretty early for the U.S. session, so something you got to play a little bit safe. And again, that's why we always say, given all of the context and everything that's going on, it becomes even more apparently true. Make a plan, trade the plan, follow those rules, and you should be okay. Until next time, we'll see y'all later.